All right, traders, George here, and time for a look at something a little bit more esoteric, market resonance. You've heard me use this term in my predictive analysis when I'm looking for targets, and it simply means that there's an area that I've come up with, a price point, where in the future I say that it's a likely resonant zone with the traders, meaning that if we move to that zone, that the traders are likely to do something there. And the way that is manifested, for example, if we're moving up to a key resonant zone, the way that we'd really know that it was a resonant zone is that the traders would either put in a reversal, a resistance swing there, or sort of a catalytic burst through that area and actually start moving up at a steeper incline than what they used to arrive at that area. The same would be in reverse if we were moving down. Going back to mid-February, and early February actually, I led you guys long coming off of this bounce around 32. We got over 38s and then 40s. That was the classic pass-through. Long to 1790 and 1832. Those were the main two price targets to look for. And then as we're at 32s, I'm looking for new all-time highs. And one of the price points that I threw out was 1891. It's a combination of ratios, math ratios, Fibonacci ratios, prior price moves. There is a confluence of many things that come together there. When we're talking about moving into new price territory where we've never been before, math is the only way that you can come up with a target. That's it. So 1891 was on my radar there. Taking you back quickly to last Sunday, for the long call, we were sitting north of 32s. In fact, we'd cleared 44 on the ceiling here, and at the time I did the video, it was at 57. So I was looking for at least a trip up to 72s, but then 1891 is the first key target north of 72s. Obviously, this is real big picture stuff in terms of the target values here, but 1891 was the key one just beyond 72s. And just 2 days later, we were already at 72, as you know from my earlier update video. But in the live room, I had you guys exit at 79.25. The fib dots were taken out at that point and chance to be all flat. Not looking to hold that into volatility overnight on that particular trade. As it turned out, it's pretty incredible that we actually popped up a little bit higher, and then we tagged 92.50 and we had a hard reversal. So 1891 resonant zone, there's the proof, an extremely sharp sell-off at that area. That's what I mean by a key resonant zone in the market. So this is a price point we had never been to ever in the S&P. It was a new all-time high. A new all-time high, and we put in over a 35-point reversal there when we hit it. Okay, so knowing about that in advance can do a few things for you. One is it can help you remain long to a noted target. It just so happens the fibs were taken out right there. It can also have you on alert for a more aggressive short play. Normally, being short in this zone here, based on what price has done, would really be coming out of emotion, revenge, or something that's not as technically based. Let's put it that way. But if you happen to know that there's a key resonance with a price point, and then you get further strength of signal from your model, then there would be cause to be short. Obviously, you'd have to give up some points there to get that strength, but there's definitely cause to be short in the mid 1880s, and then everything in reverse. 72 is now moved up to 76 based on all the trading. Below 76, which would be the first target from 88s, then you'd be going down into the 63 camp, and below 63s we're back into this air pocket where we were Sunday night. Happens that quick. Okay, but there's your key resistance swing, over 35 points from that high there at 92.50. The low that we put in here came in at 55.75. So pretty incredible there. Almost 40 points, right? I'm excited about it. This is a new all-time high for the market. It's a math-based target that I came up with before we got there, and there's an incredibly strong resistance swing put in there. And then if you go back to one of my earlier videos this week, you'll hear me talking about the time cycles. This also ties right into one of those. The last thing that I'll leave you with here is one more nod to a new resonant zone. It's actually not such a new resonant zone, but it's in the opposite direction that we've been looking. At least recently we've been looking to the upside more than the downside. Now that we have this sharp corrective impulse to work with, we've got more to look at the downside. So one of the things that I want to consider is that sell impulse here. And if we start to rally up, remember our old friend 72? Well, if we happen to bounce off of 72 as resistance and then continue down at the same exact incline and length as this sell impulse here, that would have us doing a one-to-one harmonic that comes in at the 1.618 extension of that initial impulse. And if we look to the left, it puts us pretty darn close into the dominator here, more towards the floor. And we know that 32 is a key price point on the way up. When we were at 1732, 1832 is the top line target after 1790. Here, it's a secondary downside target based on this harmonic. 1833s essentially would be a key resonant zone with the traders. And it's interesting that it's just a touch below a lot more commitment here. So that would require price to rally up, get over 63, which would be moderately bullish there based on what's happened, and go up a little bit higher, another 10 points essentially, 9 points, and then put in a resistance swing here and then pop on down. That's something that I'm looking for, and analogous to what I just showed you about 1891, but now in reverse. So there you have some incredible action on the S&P there, and a real lifeline to the market, all spelled out with the S&P roadmap here. That'll do it for now. Obviously, we'll be talking about this more in the live room next week, and I'll look forward to seeing you there.